Hi guys, hi everyone. Good morning, good afternoon, good evening, guys. Wherever you are, welcome to IC.com webinar, formerly known IC Market. Okay. Hi Nina, nice to see you here. I believe you guys can hear me clearly, right? So again, welcome everyone. So today we are going to one of the most important foundation in smart money concept is market structure, and specifically on BOS and chain of character, right? So before we start the webinar, it start off with a disclaimer first. So basically, we already know that everything in this video is purely educational in nature, all right? Nothing in this video should be considered as an investment recommendation or any kind of training advice, and you are responsible for your own trading decision. Okay. And risk warning, trading forex and CFD carries significant risk and is may not suitable for all investor. Okay. So speaker today, my name is Peggy. I'm an investment analyst and a prop trader. All right. So like I just mentioned, guys, today, okay, rather than memorizing the label, but I want you to learn a repeatable way of leading structure. So we will be covering first thing, which is first one, how to identify clean market structure. Second, how to distinguish between like BOS and chain of character. And then the third one, the most common mislabel trader make and how to fix them. And finally, how to combine higher time frame bias with the lower time frame structure. So I believe by the end, when you open the chat, okay, I want you to be able to answer like 3 questions. What is the current structure? Second, what would confirm continuation? And the last one, what would tell me that structure may actually be changing? Okay, so clean rules. Okay, so basically structure, market structure. Okay, how we gonna look, right? So before we talk about BOS, which is break of structure, and CHOCH, which is chain of character, we need to establish structure in the bullish market. We generally expect price to create one is higher high, higher low, right? Higher low. We know that this is uptrend. In the bearish market, price make a lower low. We know that's right. By now, you choose lower low, lower high, lower low, lower high. This is, we know that's a bearish market, okay? The important words here is meaningful. So the market produce hundreds of tiny highs and lows. So we don't want you to label like every candle, okay? Frustration. We want you to identify the swing point that actually cause price to expand. Okay, so you need to look for obvious swing, okay, like obvious swing that can put the price break above this high. Okay, that's why whenever you look on the lower time frame, you will see a lot of now it's because like lower time frame, let's just say like M5 or M15, they will see like really tiny swing, right? And then you will get confused because you don't know which is the significant swing point. Okay. Let me delete first. Delete. Why can I delete this? Oh, is it because I'm using this one? Okay, got it. Okay, let me just continue. Okay. So a useful question is, did this swing cause a meaningful displacement and structure break? Okay. This swing caused a meaningful displacement or structure break? That is the question. Okay. And move on to what's called a clean swing, right? What's called the clean swing? You guys remember? Let me see. Hang on. My screen is freeze. BOS. Okay, not what's called the swing clean first. Okay, so let's just talk about the what's called a clean swing. Okay, whenever we look at the swing, okay, you will see that the swing high and low must stand out from the nearly candle. It's not just one candle wiggle. Reaction leg, right? Price should react meaningfully away swing before it's promoted to structure. Okay, you need to look all the confirmation and look for the clean swing. Like I just mentioned, like obvious, like swing point or swing high and the swing low. Okay, obvious swing high and the swing low. You understand? So let me pull out the chart. Okay, let me put on the chart here. Maybe we look at the chart list. Okay, let's just talk about the BOS first. Okay, so talking about the like break of structure. Okay, so break of structure of BOS actually is the trend continuation. Okay, is a primary continuation signal. Okay, suppose the market is the bullish. Okay, we have the higher high, higher low, higher high, higher low. Okay, and then price break above the previous high, like which is significant high. Okay, that break support continuation of the bullish structure. This is what we want label bullish BOS or break of structure here. Break of structure, bullish break of structure. They make the higher high, they make the higher low. Okay, for bearish structure, it's just opposite, right? We see the price make a lower low, lower high, lower low, lower high, and price break below the previous significant low, the previous low, which is here. This is become our bearish breakup structure, which is here, right? This is a breakup structure, price take down the previous low, okay? So I use it when a meaningful structure point is broken in the direction of the pairing structure, okay? And now chain of character, the chain of character is slightly different, right? Because the chain of character, which is if BOS is primary about the continuation, so the CHOCH or chain of character is the early indication that the existing directional behavior may be changing or changing of the trend. So basically, price have been create a higher high, right? Like before that, price make higher low, and higher high, right? And after that, price break the previous higher low, correct? This one we're gonna label as the chain of character. Okay, let me put it for you. So this one we're going to label at the here, which is BOS. Okay, CHOCH. Chain of character. Why it being here? Why it's not move? Okay, let me put it here first. I'm gonna put here. Okay. This is the this is a chain of character because they break the previous law here, right? Yeah. Okay. This is our chain of character. The break of structure is where? It's here. Okay, I'm gonna put here and label. This one is BOS. Okay, BOS is here. It's here. Okay, this is the BOS. The same here. Right? I put like that for you too. Okay, you'll see that the first, let's just put here, before that price on uptrend, right? Price on uptrend. You know that price on uptrend, like price make a high, low, high. Okay, we're gonna see something like that. Oof. And we know that this is a BOS. Okay, one price broken down, this is a previous low. We will know that this is a chain of character, break of structure, and then continue. Become like this one. Okay. From here, it's a bearish. Right? This is like the bearish here. This is a bearish price breaker, right? Lower low, lower high, lower low, lower high, lower low, chain of character. So from bearish to bullish and price make a high, low, high, and higher low, and so on. Okay. So this is a chain of character. So basically, it's just a reverse apply ether. Excuse me. Okay, now you understand, right? Break of structure is a continuation. Chain of character is a reverse or existing of the trend. Okay? And clean structure rule that we have the 6 step for the label test. This gonna be the 6 rules, right? What we have. Hang on. I think I missed up something. Let's talk about clean structure rule first. Okay, the first one. First, what we're gonna need to do, we're gonna make external swing high and the swing low, right? And then we're gonna have the like internal, not internal, like identify. I think I missed. This one should be at the first structure, the like 6-step structure level. Okay, I think I mixed the slide. Never mind. Let me just put this here first. Okay, so let's just put in, we look for the clean structure. This is a 6-step label test. Okay, mark external, swing high, and a swing low. Basically, we're gonna look on the higher time frame. Then second one, we're going to identify the higher high, higher low, lower low, or low lower high. Okay, higher low for the uptrend, lower low, lower high for the downtrend. Okay. After that, you need to separate the external versus internal swing. External on the higher time frame, internal basically in the lower time frame. Okay. After that, what we're gonna do require a meaningful break of that relevant swing. Look for displacement or close confirmation. Okay, we're going to deep dive on displacement later and label only after the context say continuation or shift. Continuation meaning break of structure, shift which is change of character. Okay, all right. And after that, going to talk about the external and internal structure. I need to move the chart to this. Okay, I think I mixed up. Let me just identify the next one is the external and versus the internal structure. Okay, one distinction that immediately cleans up your chart is separating external and internal structure. I mean, external structure from internal structure. So basically, like what I mentioned, right? External structure is represented the larger swings time frame, which is higher time frame. Internal structure is like, smaller movement. You look at the lower time frame. Like imagine the higher time frame is bullish, I make the higher high, okay, higher low, higher high, higher low, and higher high. Okay, inside that pullback, which is inside the pullback or inside this pullback, right? Inside the pullback here, the lower time frame might temporarily look bearish. Okay. Higher time frame is bullish, right? Maybe at the pullback, here. Okay, if it look like bearish, probably make a lower high, right? Correct. But if you look on the lower time frame, you need to sell because price it make a lower low, lower high, lower low, lower high. But bigger picture is the bullish. This is just we can say temporarily or just short-term bearish. Okay. So you may see the lower high, lower low, but actually it's no. It may simply the belly internal structure inside the belly's external structure. Because why? This is the high, this is the low, which is external. Price need to pull back to, test somewhere around here and then make the higher low before the put to break the higher high, to make the higher high, break this, the previous high to make the BOS or break of structure over here. Okay. This is one of the reason trader frequency call reversal too early. It's not a reversal. They need to break the previous low for the external, which is here. Okay. Ask yourself, which structure am I analyzing, external or internal? Are you trading internal, which is the lower time frame, or you look at the external structure, which could be like a higher time frame? Of course, the internal lower time frame, you will see a lot of noises. Okay. It's easy for you. The first thing you identify what is obvious swing high and swing low, clear structure. Okay. After we look for the clear structure already, and then we're gonna look for let's just say break of structure, change of character, right? So let me frame out again. Excuse me. Which is break of structure and change of character, which is already mentioned, right? Which is here, right? After we identify the internal external structure already, so for the BOS, we know that trend continuation, okay, and then change of character is could say that reversal like pattern. For example, here, right, if we look at the chart, lower time frame, you may see the short-term bearish, which is external is the bullish. But if you look at the lower time frame, you'll see the price make a lower low, lower high, You say, okay, this is a break-up structure. Break-up structure, you keep selling gold, for example, because you just look at the lower time frame. But then at a certain price, you sell here. Let's say you sell here because price break, so you pull back, you sell. After you sell, you don't know, you don't have idea that, hey, why suddenly go above from this level and then continue, which is, I saw that price make a low high, because you ignore the external structure, because external structure, this is already the previous low. This one could be maybe OB or FVG or Fibonacci level. That's why price bow. After bow from here, then they make the break-up structure. They make a break-up structure. They take the high, right? Okay. Chain of character we cover. We know that it's the first warning of the shift. Chain of character. Okay. And after that, after we identify the chart, we identify the swing high, swing low. We look at the chain of character. We look at break-up structure. Okay. Again, chain of character is not like really the confirm. Let me see. I think I mix the slide. Maybe let me talk a little bit more on the chain of character. Okay, like here. Okay. We know that they said it the first warning of the shift, right, for the chain of character. But chain of character is not automatically a reversal. Okay. This is extreme important. Chain of character does not mean guarantee reversal. It means the previous behavior has changed, which is price has changed, right? You see that break below the recent low. That's all. Okay. Price could reverse, but it's not 100% guarantee that price going to reverse here. There's no guarantee in this in the foreign market. We know that's right. So price could enter a large consolidation, or a break could become a failure. It's a break could become a fail structure shift before the original trend resume. So instead of we thinking chain of character mean I must immediately trade in the opposite direction, maybe we should just think about the chain of character means my previous directional assumption mean to be reassessed. So if we see that, okay, price have break, okay, and then chain, and then we already see, oh, so now I need to observe that price is about to change or change from the bullish to bearish, but it's not 100% guarantee that price going to reverse from this level. So what we need to do, we just have to wait for the pullback and then we can sell, right? We're not going to like break and then we keep selling. Then we have the confirmation for us to sell whenever we see that chain of character. Because sometimes price might break a like previous low here, and after that it go back and make the higher high. Then this one is might cause a fake breakout, which is break the support level here. Okay. And then we're gonna move on to the common mislabel. Okay, mislabel. So what we see over here, number one, let's just say price. The first common mistake is the labeling every minor break of structure. Okay, if we're gonna look at the chart, okay, or I draw here, or maybe I draw. Let me pull out at the chart. Look at the chart together. You hang on. Let me draw pull the trading wheel. I look at the trading wheel, for example. Okay. I pull out here. Like let's just put here, like this one. If we're gonna look in the lower time frame. Okay, for example, I'll go somewhere around here. Excuse me. Let's say you just want to like mark every like a swing. So like those like very kind of like, for example, like this also one swing. This also that swing, and you also say that that also have the swing here, like swing here, and then you also identify that as swing. But actually, this also like we see this is also another swing. And then you might identify, okay, this is another swing. You get what I mean? Like we identify every swing the minor break of structure. Maybe break of structure. If you were to identify this is going to be your break of structure, correct? By right, this is to say we see that okay, price tab below, this is your break of structure. And after that, in M5, you will see, okay, price have chain. It is your chain of character here, or this is your break of structure. And then you also another identify this as a like a BOS. Like you identify every swing point. Okay. After that, you also identify this another swing. But then it seems like this is price did not break about like this swing, or you just identify this is swing here. Okay, one swing is here. Second swing is here, very obvious swing, right? You see here. Then you have no idea. So what you're going to do with this side swing? Is it gonna be break of structure? Let's say if you say, okay, this is your swing high, for example. Price close above this swing high. So you're gonna look for the buy entry because this is your break of structure or maybe chain of character. You might think, okay, this is your channel character because this swing it take above this one, so you wait for the pullback and then you buy. But then after that you see the price is continue to go lower because in the bigger picture our swing is here. It's not like those tiny swing. It's nothing. We cannot count every swing candle. We need to look for the structure. Okay, right? So let's just say price move 5 candle up, 2 candle down, break the tiny high. It's called breakout structure. Or another one, look for the tiny low break chain of character very quickly, and then chart become cover and the label. For example, if you look at the chart here, if you look for the chain of character, maybe for example, maybe here, right? You're gonna look, maybe I go to the lower time frame. Look here. Okay. Right, maybe look here. You look here, you might say, okay, price have made the chain of character. Okay. Price have make chain of character, let's just say. And this is the other price make the higher high, higher low, higher high, higher low. Maybe price, you see like that, yeah, you price pull back, you buy again because this is a high. After you get a stop out. Because this is just a tiny, but you look on the bigger picture, it's still in the bearish. Bearish, right? This is the high, obvious high. Let's just high, obvious low, obvious high, obvious low. Break this period high, which is this high, right? It break. Let's just say this is M1, but you go on a higher time frame. You need look on higher time frame as well. Higher time frame or higher time frame, what you can refer H1 and H4. Okay, you're gonna look on the H1 and H4, and then on the lower time frame, you're gonna see internal structure. Okay, like what you need to do, you need to like define your structural time frame first. Let's say if you analyzing on the like M15 structure, for example, okay, then you need to look for like a meaningful 15-minute swing. Don't suddenly use the tiny one like minute structure to redefine your entry market structure. Let's say we on M15, right? On M15, Maybe here on M15. Maybe here, from here, we know it's a bearish. Okay, and now price is break above this high, right? Obvious high. We know that this is our chain of character. It's not this tiny swing move up here. This is obvious high that puts the price break below break structure, which is here. Now price break up, so this is our chain of character. So we need to look for the buy. If you look here in the lower time frame, you're gonna see the internal structure. Okay, go to the lower time frame. Right, if you look in the lower time frame, you're gonna look for the sell entry. One, because you said that price have made the equal high, double top. Okay, so now you wait for price to go and then you selling. Let's say you sell, and then let's say you don't know about this. You keep selling. Okay, you sell. Maybe you want to hold all the way here, but then you know that you will get stopped out, right? Because that is external. External, you will see that temporary is bearish, right? On a higher time frame, you're going to see that price is making the bullish. Okay, and from here, they will see that they come to this demand, plus break of the structure, come back to test our support, it become the resistance here, or maybe here, right? We could be here, this is a level. Okay, but price did not really come to the zone, come to this demand. Okay, if you draw the zone from here to here, price break, right? Break above, break up this chain of this high, make a chain of character, make the higher high, make the higher low, and continue to make the higher high. So M15 structure is a bullish. Lower time frame, you will see the short-term bearish. Because price need to sell, right? To come back and test the support level and then continue to make the higher high. Pull back. As long as price did not put below your previous low, it's still in the bullish. But one price taking down, like that, and then we know that this is your chain of character. Pull back, you look for the sell price taken, lower low. This is gonna be your BOS, right? Break of structure. This is gonna be a break of structure here. Okay. And this is gonna be your chain of character. Okay. Because why? Price taken down this higher low to make the low, make a new low, and make the lower high. Before that, this is your higher high. After that, price make a low and then make a lower low. Okay, and then it pull back to make a lower high and lower low. Okay, one price break above your previous high or your lower high here. Okay, this is gonna be your chain of character here, right? And this is gonna be your, could be the higher low or your, and after that you be your higher high or your high, your higher high. This one could be a lower low as well. Depend if you count from low, these are low, lower low, to make a higher high, higher low, and after that is your higher high. Okay, it's like that. But of course, after that, sometime you might see price is falling, and here you might see the ranging, right? Price being sideways. Now, price being sideways, what you need to do, if you look at the chart, and then you need to, okay, this is your high, the recent high. As long as price did not break below this low, you do like that. then you know that where your trading range. So basically your trading range is here, this entire move. As long as if we buy, because we follow the price chain of character to make a break of structure here, right? Okay, we buy. The whenever price is being sideways, sometimes it's sideways, and then you might see being sideways in the chart, break, pull back, maybe tapping here, and then continue the break. So as long as price did not close below, it's still an uptrend. Okay, price still being on the uptrend. Okay. And then after that, we're gonna talk about, do you guys have any question? After that, let me talk about the um hang on, okay. Comment mistake. Okay, now we're going to talk about the close weak displacement and strength of evidence. Okay, so basically this slide is where you address one of the biggest resource of the consistent level. Okay, so you need to know how to identify the source. They talk about the weak evidence. Okay, they will say that a small wick through a level that immediately close back inside often behave like liquidity sweep, not a confirmed structure break. If we're going to look here, okay, you know that this is our resistance level. If you're going to look at this swing, and then you like put it here, you might think that, oh, this is the, this is the breakout. This is a breakout. Actually, it's just a liquidity sweep. It's sweep at where liquidity sweep, we have trend line liquidity. We have those like key level liquidity, right? Or those like double top, double bottom, that kind of liquidity. You see that this is sweep liquidity, right? Take out this high, use a swing high. You look at this one, okay, and then the price is reversed, right? Better evidence, which you can see, which is a candle close beyond the swing point plus acceptance outside of the level that is stronger than the wick alone, which is the body close above the key level. Better evidence, right? Close above. The best one is that decisive displacement leg beyond the swing, followed by the pullback that the broken structure. So when it broke, we say that we're gonna wait for the pullback. So usually, whenever you see displacement, you're gonna see together with the FVG or fabric gap. Displacement, you're gonna see the big long candle. We know that there is a lot of volume coming in, or the buyer is already come in the market. So if we're gonna look at this chart, for example, you're gonna see that before is have a displacement here, it being sideways, right? If we look, we know that price is just like somehow it being sideways around this level. And after that, suddenly, you see that there is a volume come in. The volume come in, which is this candle. There is displacement, create the FVG, then you wait for the pullback, right? Respect the broken level from the resistance, it become the support level, create the FVG. So displacement, you're going to see displacement come together with the FVG. That is valid level, key level, right? You pull back and then you buy. Okay. Okay, for the beginner, let's say you just have to like closest, plus like close body close above plus displacement. This gonna reduce force like labor. So you know what's going on. The next one, invalidation stack. So swing quality. Okay. You need to ask yourself like what the broken level meaningful before the break or break quality. Number two, what the close displacement or acceptance. It's like meaning it's really break or not. Break meaning is it break with displacement or break with the body or just break with just a wick. And then you look for the contact. That the label match trend length or higher time frame. Is this breakout or like displacement you see, is this breakout of the higher time frame or just a lower time frame, internal or external? Are you trading internal structure or are you trading internal structure? Follow through. This price respect the new structure or pullback on a pullback. So one price break the key level with displacement, like this for example, break out a key level with displacement, okay, create the FVG. Is it a pullback? Valid FVG, then you buy, for example. And respect the higher time frame. Okay, let's say higher time frame is in the bigger picture, higher time is the bullish. But now you're in the bearish, right? And now we want to buy, we follow the higher time frame, which is price have break, resistance, pullback. So we buy, follow higher time frame. So you are safe. All right. Let's say the building buy from the higher time frame. Higher time frame, okay, we know that on the higher time frame is bullish. Higher time frame warning, right? They make the high, right? And then higher time frame is continuation, meaning that on the time frame you will see that price have to make the bearish internal structure bearish to come and test support level or come to test demand zone before they continuation. Okay, you see that higher time frame is the bullish, bearish ranging because price is making what? Okay, and that external structure break was we look for the lower time frame setup aligned with that unless higher time frame structure is changed. So let me draw here. This is the, let's say, no, I draw, let me draw inside the chart here. Okay, so now let's say we're on the bullish, right? The bullish structure. Okay, in the lower time frame, you see that price is make it lower low, lower high, lower low, lower high, right? This is the higher high. This is the higher low. But if you always look in the lower time frame, you will see that price make the lower high, make a lower low. So when price pull back here, you tend to sell. You tend to sell here, and then you will target where you will target the low here. Okay, or you like another low, so you sell at this level. You want to sell, you expected that price will come all the way down and then continue to go lower. But then suddenly, like just mentioned, once you sell at the price make a lower low somewhere around here, okay, suddenly price bounce off to create the high or create this high. You will have no idea why price is bound from this level because I saw the price make a lower low, low high, lower low, low high, so I sell. But suddenly price bounce up from nowhere, you don't know, and then continue to go uptrend because bigger picture price is on the bullish. Okay, let me look at the chart together. I think after this, let me look. We still have a few slides to go. Then we're gonna look together, but I can have a quick look, right? Yeah. Okay, let me look on the higher time frame. I remove the drawing first. Okay, now I'm in H4. I'm in H1. In H1, what we can see that, okay, going to H4, we can see that from here, right in the bearish or bullish. Maybe from here, the obvious high, low, higher high, higher low, higher high, higher low. Then this is a higher high, maybe the high. Then we can say, okay, I see that price have broken like this high. Price maker, this is lower low. Like this is the low. Okay, so now we're gonna look for the buy entry, right? We're gonna look for the buy. If price pull back, we buy. That's why the support level somewhere around here. But if we're gonna look at like somewhere around this level, in H4, we say, oh, this is the chain of character. This is gonna be an internal structure. The external is very big swing. The high is here, the low is here. Okay. Now we can see that price have chain of character. You might see a pullback, or you're going to sell somewhere around this zone as long as price did not like, break above this swing. And then you sell. So right now we are trading in, can say, the ranging market with tiny move here only in H4. But in the bigger picture, it look like this. So we can say that, okay, if price pull back, I'm going to sell, but where you can sell, where you can buy. If I want to buy the first zone, maybe somewhere around here or somewhere around at this level. So I mean, if price pull back, okay, and then we can go. Because right now, let's say this is the high, this is the low. So we have a new high, which is where? It's here. Okay, we can put this one at the high. Okay, our higher low is where? Our low or maybe here. Higher low. Okay. I mean, for the bigger picture here, right? So like in this tire, my trading range is from here to here. Okay, so to me, I want to see the price broke here, continue or come somewhere here and then make the higher high, which is break up this high to make the higher high. This is going to be break up structure. Okay, like this, respect, and then fall or somewhere pull back, which is at least 50%, and then we sell. As long as it did not go all the way to this low, it's not taking this low, it's still on the uptrend now or go. Okay, so to me, what we're gonna do, use Fibonacci, right? You can use Fibonacci to find the premium discount. So where 50% and below here. So basically the big picture that we want to buy is this zone. But sometimes if there is a very trending market, price gonna respect the 8.2 or small pullback at 23.6%. So then we're gonna look for the key level and then we're gonna see that, okay, if price pull here, there's confirmation, I'm good to go. Here or here or here or within the zone. Okay? Right? And after that, we move on to the buy at decision tree. Okay. We need to look for the buy at decision tree. What you're gonna do here, which is higher time frame frequency. Is it they make the higher high or lower low, lower high, or overlapping, or they just being sideways? After we look for break BOS, which is what up, which is for the higher high, or bearish break of structure, or chain of character, or none, or just messy. After that, we're gonna look for the bias output. You look for the bearish pullback plan because price make the break of structure. We need to pull back, and then you're gonna buy. Bearish pullback plan meaning price make a lower low, lower high, lower low, lower high. You wait for the pullback, and then you sell. Okay, so whenever we say overlapping, meaning it's being sideways or ranging. So we just but we just wait. We just have to wait for price to break up or break below. Let it decide whether we want to break above or break below. Break below, pull back, we sell. Break above the range, pull back, and then we buy. Okay. Example is here, right? So we see that bullish continuation into the pullback. Price make the higher high, higher low, higher high, higher low, and then it pull back. This is the pullback zone. If we look at the chart here, we know that it pull back to the discount zone, which is below 50%. Then you wait, you buy, okay, you target always for TP, you target, which is the recent high, which is here, that your TP1 always. If price break above and close above and make the higher high, then you can hold. Price pullback is not close below this low, you buy at the pullback, where it pull back, and then you buy. Stop loss you put at this swing, because if price go all the way to close below this low, that means it's not a continuation, it's a reversal, or it's going to show you the change of character. Okay, what not to do not call a tiny lower time frame is a valid change of character, trend reversal. Okay, unless the higher time frame low is break. Always look on the higher time frame. This is the example of the valid setup, right? So for the valid setup, it's the same, right? Price make a lower low, low high. You see that, right? They take out this, you wait for the pullback, and then you sell. Okay. Change of character was a confirmation reversal. Okay. Obtain loose for the last row. For example, we price make this level here. Let's say this is uptrend, right? Price break below this low. This is your chain of character. Chain of character. One price chain of character, make a lower low, is a pullback. You sell this level. And then after that, make the break of structure. Okay, you don't buy. You wait for price to pull back and then you sell. So for the bearish, okay, break of structure, you need to wait for price to pull back and then you say, we're not going to buy. Okay, when market is bearish, trend is your friend. Wait for the pullback and then you sell. All right. Any question? So far, everything is okay, right? So let's just recap. We still have like 5 minutes, okay? So the recap is that the rule that keep label clean is that define before you label. So basically, you need to know the swing point. Look for the clean and clear, high and low. Okay. Chain of character is a warning sign. It's not a confirmation. Chain of character is the first warning, not complete reversal proof. It's not guarantee 100% that price going to reverse. It's just a warning sign, and then you can look for other confirmation. Break of structure is continuation. BOS break the direction of the active structure, break the high to make the higher high, or break below the low to make a lower low for the bearish. Bullish, break the high to make the high high is a bullish. Break the low to make a lower low is a bearish. Okay. Range need humility, right? Whenever you see the range is like overlapping, ignore. Just wait. Wait for price to break out of the range and then you trade. Higher time frame is always leading, right? So use lower time frame for execution, not for overriding higher time frame bias. Okay, that is all for today, guys. Thank you so much. Again, now IC market is changed to IC.com. Okay, so now you're gonna see IC.com instead of IC market. Okay, so now let's practice. We still have like 5 to 6 minutes. Okay, for example, now let me label the key level. Let's say we are in the H4, right? In H4, we can say that this is the, okay, I see here, right? Before that, if we're gonna label in H4 time frame, like in here, if we don't label based on our eye, we know that price on the, like the bearish all the way, right? Price make a lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? And after that, maybe this is the lower high here, okay, lower low. Now they break out of this high, break out, right? If you look like that, you will see this is the, okay, maybe I put this lower high, lower low. This is lower low. This is a, lower low. This is a lower low. This is a lower high. Okay, lower high. Then you will look here. You are going to see the internal structure here. You will see the price make the higher low, right? Higher low, higher high, and make it equal high. Okay, right? After that, price make the higher high, right? But actually what? This is equal high, okay, at this level. Okay, when you look like this is tiny mip, we don't count. We don't count this one, right? Price make high, high. And then you will see that, okay, after that, price make another higher high. Right. This is higher high, yeah. You ignore. Put here. Okay, right? From here, you're going to see the price make the higher high, higher low, higher high, higher low, and higher high here. I can put in H4. Remove, right? And you know, our trading range is this one. Okay. In this level, we can see the price maybe broke around this level. Like in H4, we say that it broke below this. But then after that, we use the Fibonacci, let's say. The last retracement, we might, okay, if somewhere 6.8 here, after that, it's starting to see price make a higher high. To go to this 78.6%, let's say. Let's say, oh, now, so now you know that, okay, now price is make the high. In the bigger picture, now this is going to be your higher, going to be your lower high, right? Yeah, H4 is a higher high. Lower time frame is a high. H4 make a lower high from here. Yeah. Let's put this is higher high, right? This will be the higher low. This will be lower high. And this is the low. So if price break this low, which is price from here, we can say price make the lower higher, let's say high high, higher low. Could say that this is a higher high, a higher low, sorry, it is higher low, right? So now price did not break above this high. You did that. Price did not break above this high. Instead, we can see, okay, price to start to make the lower high. You take note. Now, price make a lower high. Your lower high, your higher low is here. So if price close below this swing or this support, and then we can see that, okay, that will be your chain of character in the bigger picture. Okay, and then we already see, right? So what you need to do, we're gonna look for the cell entry. Okay, we talk this a lower high. This is a high low. In the lower time frame structure, you will see that from here, price break below this higher low to make the chain of character here. This is your chain of character. From that, external structure is still lower high. They make the, from here, from the high, make the higher low. This one become your lower low. Your important higher low is here. After that, we see that they make the lower high. Lower high here. Right? After that, from this low, make it bigger. You go low. After they break below this low, lower low. Right, this is a tiny one, I don't count. After that, I will see the swing point maybe from here to here. Right? Then what we're gonna see? Boom. Now, price have broke below this low. Right? So now, lower, lower, high. You're gonna see that price gonna make the bullish to go back to test the lower high again here. So meaning that you're gonna see the lower time frame pull back. As long as it did not break above this swing high, it's still in the bearish. You're gonna see the short-term bullish, right? Because price already broke below this higher low to create the low low. Okay, let's say here I will say lower low. Now they make the lower high. This is the make the higher low in the signal, right? Then you will see that they make the higher high here. After that, you make the higher high, right? So now what is our high? So now price is the internal structure right now. Our important high is where? It's here. So go back to about 5,000 somewhere around that in the bigger picture because it break, right? We look, this is a tiny move. Okay. So if you ask me, it will, I will still say put it here. So now move to this level. If we look for the structure, right? My lower high is here. Okay. Right? If we look here. Lower, swing, lower. This is high, right? Price could not close above. We see that. Okay, now close below. If they close above this high, lower high here, then you'll see that go out up trend. This is the low. So now price is just trading in this trading range here. This entire move. Did not really close below this level just yet, right? This is in H4. Okay. Now, right, lower high. It still make a lower high, but this one it make a higher from here. They make the higher low, but they still make the low high. This is the high is the here. We look for the significant, right? This is swing. This is lower low, lower high. But then our price is somewhere around this level, which is come to test the how many percent? 50%, not even 50%. Not even 50%. So now the important high is still that. So basically, we still trade in the kind of the pullback. We are in the pullback here. Right, we are in the pullback for gold, right? We are in the pull back here. If we look here, they still make the lower high, lower low, lower high here. So right now what we are doing, okay, you see that? After that, do you break below this swing? By right is no. You see? Now this is our low, they make a lower low. It seems the wick, okay, the wick is here. The body is close below to make a lower low, right? Now our important low is here. Where is our high? My high is still here, like at the like 5, let's just say 5,000. So now price is close below this. We're gonna see that price is going to break above this high, which is here. Okay, now we're in lower low. Lower low. This is a swing. The body close below. Now we see the price it pull back. Now where are we? Okay. Now close below is low again. Let's just say this low, we can look for this high. Now I want to trade with the internal structure already. Okay, they start to make the equal low. Okay, now it break out this high because we want to trade in this low. In the bigger picture, it's still in the bearish to me. But now we are in the internal structure, the lower time frame, right? Lower low, lower high, lower low, lower high, equal low, make the breakout structure and the pullback. If they take out this high, you can hold. As long as price did not close below this low, right? Your buy entry is safe. Now, boom. After that, it break out of this high. It was being sideways. Boom. Break out and then you buy, right? You see. Okay. So go and look. If you cannot see, you can just make it smaller and then you can see it like that. You know what's going on for gold. Okay. It's being sideways here, right? Triangle. It break out. Like you look for the obviously high. This is my very obviously high, obviously high, obviously low, obviously low. High here. This is just an internal. This is obviously low. It's here, right? The low. Okay. All right. Any question before in the webinars? Catch up you guys again next week or 2 weeks later. All right, guys. So identify the clear structure. Look for the obvious high, and then you mark it out. Okay. And that high gonna be your trading range. You look like that. Okay. I use console, right? In the obvious that you can see. Okay. From that, we can see that. Okay, this is the high. Price about to break, and this is the high that price break above, and then before that is price make a triangle, something like that. All right, so thank you so much for joining. So see you guys again in the next webinar. Okay, so happy trading. See you again next time. Bye bye and take care.